Very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be continuing working with the indicator named RVI, which stands for the Relative Vigor Index. This is the third and the final part of this series, and in today's session, the focus is going to be on the completion of the sell side of the equation. So let us now go to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In last two sessions, I had completed setup so far, which includes the instrument subscription where we are using the Euro USD as the instrument of choice. Afterwards, the position amount was defined at 0. I have also added these two RVI blocks of the hourly time frame. And to look at the price volatility, we are also taking the help of get historical candle. These two are of 1 hour each, and latter two are of 10 seconds each. And to define the condition of the minimum pip difference of 20 pips, this calculation expression was used, and this is the calculation for actual difference. And on the lower side, we have these buy side conditions in place. Now, as I said, we are going to be focusing on the sell side of the algorithm. For that, I will give you a brief refresher of the logical conditions which need to be in place for the execution of the sell trade. This is the Euro USD chart of the hourly time frame, and the conditions are quite simple, easy to understand, and also easy to implement. We are relying on the RVI indicator to give us the direction whether the underlying instrument is bearish enough to go for the trade or not. And for that, we are going to be using this RVI output along with the signal line output, and the important marker is going to be the zero line. So as and when we see that the RVI is dropping below zero after having spent some time above zero, we will be looking to initiate the trade. And along with that, we also need the RVI output value to be below the signal line, so that will be indicative of the underlying bearishness prevalent in the Euro USD for our purpose, as we are using the Euro USD as the instrument of choice. And to make sure that this is the new resumption of the bearishness, we are also going to add the condition that 6 hours back the RVI output was still above zero, and also it needs to have been above signal line. So that means in last few hours the crossover has taken place. The RVI has dropped below zero, along with the other condition that it has also dropped below the signal line. So both these developments have happened recently. That means the bearishness is now creeping in, and this might be the time to look for the initiation of the sell trade. So that's the condition, quite simple. Okay, and to make sure that there is enough of momentum, we are also going to rely on the volatility, and for that we need to make sure that the difference between the last hourly candle close and the hourly candle which closed 4 hours back, or for that matter you can also take the candle which closed 5 hours back, so we will have the time interval of 4 hours. So the difference between the closing values of these two candles should be more than 20 pips. So the minimum value of 20 pips is going to be our requirement. So suppose if, for example, here we have the crossover in place earlier, the RVI output is trading above zero and above the signal line, and after that it goes on to drop below these two conditions, two parameters. But if we look at these difference between the hourly candle close, I think it is not as per the requirement of 20 pips, so no trade will take place. And only when we have this additional condition in place along with the RVI requirement, the trade initiation will happen. That is simply to make sure that there is enough of momentum in the change in direction, and it is not happening simply because of the underlying instrument going sideways. So that is the logical requirement. Now we head back to the Visual JForex board. And let us now begin the work, and first thing first we will have to do is get the calculation done for finding out the actual difference between the closing values of the candle 15 and candle 16. As you can see, we have the shift value of 1 here for the candle 15 and shift 5 for candle 16. So we are looking at the time interval of 4 hours between the closing of these two hourly candles. So now I will have to add the calculation expression. Okay, and as we need the candle 15 close to be below the candle 16 close, and the difference between the two should be more than 20 pips. So this time around I will have to deduct the closing value of the candle 15 from the closing value of candle 16, and for that I'm going to retrieve the closing values from these auto created variables, and here it is. As per Excel convention, we have to do A1 minus A2. Okay, and here we get the actual difference. So this variable has been created now, which will need to be compared with this minimum requirement, this variable MPD. Now let me join it back to the multiple action, and now we start adding the if-else blocks for defining the conditions. And here we need the RVI 10 to be below RVI 14. And I think if we don't do the direct comparison, that will also work. We simply have to make sure that the RVI 10 is currently below 0. So I will use this method of comparison. Okay, first input less than second input. Whereas RVI 14 was above 0. This is the RVI output 6 hours back, which we are retrieving. First input greater than second input. And we also have to compare the RVI output values with the signal line. RVI 10 needs to be below signal line 10, whereas RVI 14 needs to have been above signal line 14. First input again less than second input, and in this case first input will need to be greater than second input, and after that all we have to do is compare the newly created variable LSD. First input greater than second input, and now I am going to compare these two so as to make sure that there is enough of volatility. We have the difference between the two hourly candle closing values of more than 20 pips, and once all these 5 conditions are in place, we will be looking to initiate the trade as and when the price starts to drop below last hourly candle close. First input greater than second input, and now I have to take the closing value of candle 15, which is going to be the common input for both these if-else statements. we compare it to candle 17 and candle 18, which are 10-second historical candle with the shift value of 1 and 2 respectively. Candle 17 candle close needs to have been less than, so first input less than second input, whereas candle 18 candle close will need to have been greater. Okay, with this we have defined these conditions for the execution of the sale trade. Now let me arrange this on the lower side. It is not going to take much time, just a couple of seconds I guess. And with this we have these conditions defining the logical requirements. Now we need a trade command block to be added. We are going for a market open, so I will be using open at market block. And here it is. In this case we will need first input to have been greater, so now I will have to change it to sell. Coming to the input parameters, default instrument is going to remain Euro USD. Trade amount I will change to 0.1 million. Slippage 2 pips is good enough in most of the cases. Stop loss and take profit. We had talked about these parameters, the stop loss and take profit last time around also. You can make it dynamic or you can go for a static combination. And this time around we are using simply the static combination with the risk reward ratio of 1:2, since we are dealing with the hourly time frame, and also we are trying to make sure that the trade initiation is likely to happen only during the initial moments of the change in the trend. I think the possibility of going for the take profit of 30 pips is likely to bring us good reward. So this time around we will be using the risk reward ratio of 15 pips as the stop loss and take profit of 30 pips, getting us the risk reward ratio of 1:2. So with this we have these two mirror images of the system in place. One side it is for the buy side, and now we have also completed the sell side of the algorithm. And with this our algorithm is also complete. So if you have any query you can write back to me in the feedback section. So that's it from my side for the day. Before I sign off, I would also like to suggest that once you complete the algorithm, you should carry out the testing on the JForex platform for many months, or even you can go back in time to a couple of years and test the algorithm to see if it is efficient or not. And also to check out the market developments, you can use the resources provided by the Dukascopy Bank SA to check out the Market Watch page. We are also available on the Facebook. You can reach out to us there. Thank you all for joining in. Have a fabulous time ahead. See you next time. Till then, goodbye.